All right, so this week we had a bunch of gaps filled on the charts that we'll see here in just a minute as far as the markets go. Um, the rates were up. The 10-year yield was up. That's a little concerning to me. The dollar continues its way up. Those will be pressures on the markets, especially technology. So let's just start with the Dow Jones, and you can see that we got out of this cup and handle, you know, format. We got the head and shoulders. We got a little bit of everything going on here, and then we reached a high here, and now to me, everybody's going to have a different interpretation, but you know, you're going to maybe have something like a bull flag, out. So waiting for this to break through. The Dow held up fairly well today. The markets were mixed, and the Dow was up, and we'll see here in a minute. The Russell was up for the week, and then, or excuse me, well, I don't know about for the week. I think it was down for the week. The Russell. Um, let's take a look here. We see the Dow. No, yeah, the Dow was up just a little bit for the week, and that's a weekly data. And then let's go back to the SPY was down. But it's had a pretty darn good run. And if we look at the weekly data, it doesn't look so bad. We're still following this uptrend that we started back in March and have made its way up. We did fill some gaps, as I mentioned in the intro, especially on the SPY. We're a little short here on this gap that I left open here, but we filled. There was a small gap right here, very small. It was filled, but we've left one open here above us at about 455. So we'll see if that, I think it's at this point you think the SPY is probably going to go down, fill this gap. How far do we go down? It could turn any time if it's going to turn back up, or it could continue all the way down. Technically, yeah, I think now would be a good spot. Possibly here, but 430 would be really the line in the sand there, as I mentioned last week. The Qs, same kind of thing, a little bit different look though. This one concerns me a little bit more. Let me get these out of here. It did fill some gaps on the way down. So we had this gap here, and then we filled this one this week. And, it just, because we had a kind of a low, well, we had a lower high here. So that's something to kind of watch to see how it reacts moving forward. I'm still looking for it to go as low as 357. I'm hoping it'll turn around, but we'll talk about the reasons why here, especially in my final comments. But the IWM, kind of the same thing. We did fill this gap today, maybe even yesterday. It could have been yesterday also. Got filled here at 190. I'm looking for 188. And then obviously we got another spot here about 185 if it goes further than that. I put in some puts around in here as things looked like they were breaking down a little bit. The yield on the 10-year has been on a rampage, and I really thought it would have trouble getting through this area, and it kind of rifled through it. And then I thought maybe we'd have some problem at 409 here, this area here, and it didn't. It went right through, and so now does this maybe get a double top here at roughly 2%, or we run up to 4.33% on the 10-year. The DXY kind of faked me out a few times this week. Well, first of all, we broke this banner here, and I thought we were on our way down. We broke 100, made our way back up, but again, this could be the makings of a bear flag. Running it up to here, let's say, and then getting a reversal. So we got one bull flag, we got one bear flag, and different things, but we got a bear flag potentially here. And how much further will this roll up? I'm not sure. We got some resistance up here around 103. I'm anticipating it'll turn around before it gets up to, let's say, 105 and start making its way back down. But we do have some, structural wise, we still have, lower highs, lower high, lower low, kind of had this draft here. But since, say, May, we've had this structure, and it becomes a little bit more evident on the weekly when we take a look at the weekly data. So I'm still anticipating this to continue down. It may run up, hit here on this downtrend line that I have, and we'll see what happens from there. One thing that's affecting rates is inflation, and we finished right here at this zone. I am thinking it will turn around from here, but it doesn't have to. We get a multi-level. We got a lot of resistance here in this particular area, 83. It tried to get above it this week, and it's just kind of sitting in this zone at the moment, but I would anticipate that it would start to make its way back down also, but it doesn't have to. And the next spot would probably be up here around 91, but I'm just not anticipating it to get up that high. The VIX, despite the markets, the mix of the markets was down today, kind of still in that very low volatile environment. And unfortunately, we broke this trend line here for the percentage of stocks that are above the 200-day average, and hopefully get some support here soon and start our way back up. It may be that some of the tech will lead its way back up. You can see, let's just take a look at a couple things. Apple broke this trend here. We started maybe to flatten out a little bit here in this area. It's got a little bit of support here between here and even the top over here from August of last year. And so we're looking around a little bit of support here to hopefully get this thing going back up, especially if you're a bull. And then we have NVIDIA, which, had that big gap up. We have this thing going on. Now, what is this? I don't even know. I mean, there were so many times I thought this thing would, this flagged out here. That made sense. It needed some time to rest, made its way back up. But a whole bunch of times in here, I kept thinking, okay, we'll come back and we'll fill this gap. And then we got and then we left a little one here. And then we got this huge one down here. Now, I don't anticipate this is going to go all the way down to fill this gap at 305. But I am hoping that I'm kind of bearish on this, even though I don't have any plays in it right now, other than semiconductor ETF. Like to see this thing come back up and get to all-time highs. But it made you look at these things and made a lot of progress. I mean, look at that. It's almost straight up. So you're expecting it would pull back down with that straight up move all the way to 305. No, but if it does, I don't believe so. But if it does, definitely would be interested in it at that point. Looking at the other environments there around it as far as how the overall market is performing. But anyway, this one obviously been a high flyer for a while and needed a rest. So, economic calendar this week, there wasn't a lot going on other than the two things that I mentioned that were key um, to this week, which were the CPI, which came out and right in line, and then PPI that was up a little bit more than the consensus, but it really didn't seem to impact the markets. I was a little surprised after CPI came out. We had this huge run up. If we go back to SPY, go back to the daily, but we had this run up yesterday, and then it came back down and closed a little bit. I think it was maybe a little bit up or pretty close to the low of the day from Wednesday. But the fact that it made that run just wasn't quite ready. It hadn't corrected enough yet, and so yeah, you wind up where we did, and so that was really this week. We did get the Michigan consumer sentiment at 71.2. We also had initial jobless claims came in a little bit hotter than expected, and then the mortgage rates running hot right now, and probably will be up next week unless there's some change Monday and Tuesday when we look at this on Wednesday again. Taking a look at next week, there's not a ton going on. There's some things, not the big market movers like you would normally see. You got retail sales, the New York Manufacturing Index. You've got that's Tuesday. Wednesday you have again the mortgage rate will come out. We'll see where that lands. You have building permits. Supposed to be up just a little bit. Housing starts pretty much the same as far as expectation. We're expecting possible increase in the building permits. Philly Manufacturing Index will come in. Initial jobless claims on Thursday. But that's other than that, and the FOMC minutes could potentially move the markets a little bit on Wednesday afternoon. But there's not a lot there. And unless something comes from the outside or interest rates start to go down, and keeping an eye on the Truflation portion of this, basically, we had it run up a little bit this past week, but today it was back down. Food and beverage was down, housing was down a little bit. Transport, that's oil. Probably come back into play. I'd like to see, like I said, like to see that turnaround, from a pricing standpoint. And it really still just eats away at me, that we could have, oil independence without all this crazy stuff that we have going on. To be green, you're going to need fossil fuels, and instead we're buying it from the dirty stuff from China. And we're denying jobs and in the oil industry and giving those projects to China. I don't get it. Somebody help me. You're going to have the fossil fuels if you're going to even if you want to come be electric tomorrow. Everything electrical. We don't have the grid that requires metals. It's going to have to be mined. So it's just we're shooting ourselves in the foot, and it's just ridiculous. Then that's really what I want to cover. I guess my final comments, just real briefly, are the things I'm watching are going to be the rates. I'd like to see these rates on the 10-year because it will tell us a lot about what's going on, start to turn around. Hopefully this was false breakout like here, and we see this go down, or maybe it goes up, double tops here or something, to see the rates come down. There's really as far as rates go, nobody's predicting that the Fed is going to be raising rates in the September meeting, which is their next meeting. to raise, and then November, we really have it 62% chance of it staying where it is with the data that we have so far. And then we look at December. Now they're even here. We're talking about maybe a rate cut, maybe an increase. So kind of all over the place here. So we'll see kind of what happens with that. The other thing is the dollar is starting to see this raise. We're in a zone right now. Could it turn around here? Yes. If not, maybe up here somewhere, and then continue on this downtrend or against this trend line here. And then oil. Those are the things that are affecting the inflation portion. We got a lot of oil out there, and then of course we've got lots of government spending that's happening that contributes to it. But I'm still anticipating that the markets are going to head back up, and I would be happy to see that go from where we are now. And so I don't really have anything other than that I think the Dow will probably lead. It seems to be in a good position at this point to lead it back up, being in a bull flag right now position. We see a breakthrough there, may lead it back up. And that's kind of what we saw a little bit back in March, is we saw the Dow kind of run up more first, then we saw the SPY and the Qs go. But we're going to have the rates come down because obviously that affects technology. It's very influential in that. And then we've got to continue to see IWM has held up. Actually, as I've said, it's from the charts, they've held up very well to this point. So anyway, that's what I wanted to cover for this week's weekly economic and market update. And remember, there is always a better way.